If I took away your strategy today, but left you with proper risk to reward ratio, you could still become profitable. Today, I'm going to show you why. Most beginners focus on win rate. They want 80% accuracy. But do you know that 40% win rate with 1:3 risk to reward is more profitable than 70% win rate where you have 1:1 risk to reward? It's impossible? Well, let me show you. Let's do the math together. So, as you can see on the screen, we are considering Team Green and Team Red. Team Green has 40% win rate. Team Red has 70% win rate. Who would you think is going to be the winner? Team Red, of course, 70% win rate. If you're looking at it this way, you're considering it like we used to in school. You know, in school, for you to have a distinction, you need 70 and above, right? So if someone has 70 and above, and another person is showing you that their result is 40, who is the one that has better grade? The 70%, right? Now, I'm going to show you that that is different in trading. Let's go. So 40% win rate. However, this 40% win rate has 1:3 risk to reward. Now, for 70% win rate holder, it has 1:1 risk to reward. So risk is $100. What is his reward going to be? You can pause the video. I'm giving you 5 seconds to decide. What's his reward going to be if his risk to reward is 1:3 and he's risking $100 per trade? His reward is going to be 300. All right? 300. So that's what 1:3 risk to reward ratio means. Now, in this case, this person's win will be 4 out of 10 in a week. We are just looking at 1 week trade now. 4 multiplied by what now? The wins are the rewards, the ones that are profitable. It makes $300 on every trade that wins, everything being equal, right? Now, 4 multiplied by $300 gives us 1,200. How about its losses? Losses are 6 trades multiplied by what? $100. Every trade, once it goes against him up to $100, the trade closes automatically at stop loss, right? So this person has 6 multiplied by 100 equals to 600. So what is his profit here? What is his net profit? His net profit equals $600. Now let's go to Team Red. Team Red is risking $100. What is Team Red's reward going to be? Remember, 1:1 risk to reward. In 5 seconds, what is reward going to be? $100. All right? So reward, $100. So now this person also take 10 trades per week. His wins will be 7 multiplied by $100. And his losses will be just 3 losses, but they are also $100. Now his profit is going to be what? 700 minus 300, $400. Team Green is going home with 600. Team Red is going home with 400. Who is the winner? Of course, Team Green. And what is Team Green's win rate? Just 40%. So what makes the difference? Why is he able to go home with $600? Why someone with 70% win rate is going home with 400? The risk to reward ratio. He's risking $100, which means every time the market goes against him, he loses $100. But every time the market goes his way, he makes as much as $300. But for the Team Red, who has 70% win rate, when he makes money, he makes $100. When he loses $100. What happens? At the end, even with 70% win rate, yes, it's still profitable, but it's not as profitable as the one with 40% win rate. Why? Risk to reward ratio. Professionals aim for 1:2 risk to reward, preferably 1:3 risk to reward when structure allows. Not first, structure based. Let's see how to calculate this on the chart. So say that you have your entry points, the price has broken out. We looked at these double bottom, price broke above the resistance, retested it, and then it moved up close to above your average. Say this is your entry point. You decided you're going to enter here. Where is your logical stop based on the market structure? Your logical stop is going to be here, below the support, below the recent swing low. So this is the swing low. You can give it some small pips like this there, and you look at a swing high in the past, and somewhere here can be your take profit. So if you decide you're going to take your profit here, your stop loss is going to be below the last low. What happens? You have 2.28 reward to risk ratio. All right, so that means you're risking 1 to make 2.28. Very good one. Let's see another example. So say that here for this one, you decided you're going to do a buy and your entry was at this point. You're entering here and your stop loss, logical stop below the structure low. Here, take profits. You decide to see a high in the past, and you see we have a resistance here, your stop loss here, and your take profit here. What do we have? 2.81 reward to risk ratio. So you're risking $100 to make $281. Interesting, isn't it? So measure both distance, your risk, which is your stop loss, your reward, which is your take profit, and confirm that there is at least 1:2 risk to reward ratio to know if this is a trade you're going to take or not. If it is less than 1:2 risk to reward ratio, skip. You don't have to take every trade. Guess the psychological shift here. You will stop fearing losses because losses are part of statistical execution. If you master risk to reward, you will stop gambling and start operating like a business. And sure to subscribe to my channel for more value-loaded trading videos like this. And if you're looking to learn how to do trading right, join us at MS Africa Academy. We hold you by the hand, work with you every step of the way. We offer both online and offline training program. Our physical training program is currently in Lagos, Nigeria. To learn more, you can click on the link in the description or send us a message on WhatsApp.